outlook for banks operating in Ghana in 2024, saying the external debt exchange will have little impact on the operations. Also coming up, Cedi loses over 2% in value to the dollar this year, but expected inflow from the International Monetary Fund and Bank of Ghana will ease depreciation pressure. My name is Daryl. Kwawu. Thanks for joining us. Details coming up. Thanks for staying with us, everyone. It's great to have you on the program. The World Bank is expected to meet today to approve some $300 million for Ghana. The Washington-based lender is advancing their support for Ghana after the country managed to secure a deal with bilateral creditors and consequently completed the first review of the International Monetary Fund program. George Affe has details.
Joy Business understands that the executive directors of the World Bank Board will approve and disburse $300 million to Ghana. Sources say Ghana has met all the conditions needed for this support to be advanced to the country. The World Bank Group is one of several donor partners that will in the coming weeks approve more support for Ghana after it passed the first review under the IMF program last week. Former country director of the World Bank has been outlining the areas the money should be advanced once it hits governments of Ghana's account.
Basically, cash going into your consolidated fund, and then, of course, the program spending is there in line with budget that's been approved by Parliament.
World Bank will also, in the coming weeks, meet to approve some $250 million for Ghana. This is part of support with the Financial Stability Fund, established to assist financial institutions and commercial banks hit badly by the effects of the domestic debt exchange program.
Now, rating agency Fitch is predicting a favorable outlook for banks operating in Ghana in 2024. This follows the successful conclusion of the domestic debt exchange, which most banks were negatively impacted by. According to the UK-based firm, the external debt restructuring will have little impact on the Ghanaian banking sector, but warns of elevated loan quality risk. Here's Director of Europe, Middle East and Africa Banks Ratings at Fitch Ratings, Tim Slater.
Reflects our view that conditions will improve relative to a particularly bad 2023, which saw the sovereign default on both foreign currency and local currency debt. The domestic debt exchange program, which was launched in December 2022 but concluded last year, inflicted large net present value losses on the banking sector and had a significant impact on its capital. We still believe that the accounting treatment of the exchange and regulatory forbearance will continue to mask the true effect on the banking sector's capital this year. The sovereign external debt restructuring is ongoing, but in our view poses far less risk to the banking sector due to its small exposure to sovereign Eurobonds. The banking sector's NPL ratio increased quite sharply last year as a result of the sovereign default and its macro implications, and we expect loan quality risks will remain elevated this year as conditions remain challenging, but recognize that these risks are again diminished by the small size of the Ghanaian banking sector's loan book.
Well, on Zoom with us is Dr. Richmond Ituaine, who is a banking consultant. Good afternoon to you, Doc. How seriously should we take this warning of an elevated loan quality risk for banks? What is triggering these risks and what would be the implication? You're muted, sir, if you can unmute.
Yeah. Hello.
Yes, we can hear you.
Yeah. Good afternoon.
Good afternoon to you.
Yeah, thank you very much. And good afternoon to your cherished viewers and listeners. The Fitch report is based on deteriorated macroeconomic environment over the last 2 years or 1.5 years. And it's not going to go off as it is, because some of the conditions are still prevailing. We have higher inflation, more than any other country in the sub-region. Secondly, we have the legacy debt in the energy sector, which has not been handled very properly. Currently, we see treasury bills averaging before the DDEP, the treasury bills were 22%. Currently, it's about 31, between 28 and 38. All these things dovetailed into NPL, and it's not going to go down as easy as people think. Whereas the microeconomic environment is not readily being addressed, we're going to have the NPLs still very high. It's averagely higher than any other country in the sub-region. We are talking about close to 20%. I mean, the IMF report, some of the reports earlier in non-performing, any country that has more than 10% non-performing, that country is in serious crisis. Unfortunately, we are about 18. So we haven't reached a position where we can lower it to 9% or 10%. So we are not out of woods at all, because all the deteriorated economic environment are still prevailing, except that the CD has been fairly stable. But if you take the CD out and you look at the higher lending rates, the rates that are being lent to businesses would always call for default. And that's why some of the banks are experiencing higher non-performing. It takes the whole address of the microeconomic environment, where inflation comes down, say, to about 10%, where lending rates would drop to about, say, 15%. And these things would dovetail. And don't forget, we have nuisance taxes, which are also affecting the private sector. And the biggest one that is hitting the private sector is the electricity, the utility. Last year, it was a big hit on the industry. And once industry is not doing very well, it means that the banks who have lent money to them will not be doing well. So in Ghana, we have a myriad of problems that needs to be addressed. Some of them are fundamental, that needs to be looked at, especially like the energy, the debt overhang in the energy sector. And if it's not addressed, we will continue to have these challenges, because it's the banks that has financed these energy sectors. And if they are not being paid regularly, then it means the non-performing will go up. It is clear, and there is a literature evidence that if you don't do the right thing, you're going to have this. And the last one that I want to talk about is that the various banks should enhance their credit risk assessment. When you're going to lend to, say, a contractor, what type of contract is he doing? Is he a GOG? If it's a GOG, Ghana government, you will be sure that you're not going to be paid on time. You only have to do donor support, or the IMF or the World Bank project, because if it's only that one, you get paid. If you go and do a GOG, if you lend money to go and do Ghana government roads, you're not going to get paid. And that will stand on your books, and it will affect your non-performing. So the banks too should enhance their credit risk management to enable them to be able to be very selective of areas they want to lend money to. Other than that, we will continue to experience this over a long time.
You talk about what the banks are supposed to do. Can the regulator help in any way to minimize the risks? How about the managers of the economy?
You know, the managers of the economy has been charged to create enabling microeconomic environment, which is conducive for private sector borrowing and lending. But unfortunately, we have higher inflation. We have higher interest rate. The policy rate is about, I'm told, is about 30% or thereabout.
Yep.
I mean, no bank will lend money to you. The treasury bill rate is also having a determining factor on the lending rate. And if I read the last report of the Bank of Ghana treasury bill, I think I was told it was oversubscribed by a whooping 72%. Everybody wants to go into easy way, but not lending to the real economy. Because if you lend to the real economy, you're going to have a problem. And that is, we haven't learned a lot from the DDEP. You know, the DDEP brought its same problem. The banks saw a soft way of making money. They went to the bonds. And when the bonds were restructured, you saw what happened to them. But they were only fortunate that The last tweak of the bond, the DDAP, it tilted in favor of the banking sector, because the original one done in December and January, the banks were going to suffer hugely, because the banks thought it is easier to go into bonds, easier to go into T-bills by not lending, doing your due diligence very well on the private sector and lending to the areas that will lend to growth. So I think the banks will need to enhance their lending skills, credit risk management, and enhance the credit monitoring and see which sectors do we go in. As I've given you a tip, if you're going to lend and you lend to GOG contracts, you're not going to get paid.
Yeah,
you're not going to get paid, and it's going to affect the non-performing. So that is what I would say for the time being.
Yeah, while we talk about lending, the Monetary Policy Committee of the Bank of Ghana is beginning its meetings today. We expect a decision on the policy rate next week. And we know that has an impact on the cost of credit. Analysts are divided on whether the rate should be maintained or reduced following inflation decline. What do you anticipate? What do you advise?
Well, where I'm sitting from, look at the geopolitics now going on. I mean, the geopolitics affect us. If people do not appreciate it, what is happening in the Middle East is going to affect oil. And if it affects oil, definitely the price of crude oil will go up. So all the plans that Bank of Ghana are saying, they're always cautious. I think the last MPC, the governor said that if the condition is not right, he's not going to drop. And the condition now, I don't know, it's not easy to predict it, because what is going on with the US and the UK helping to fight the Oman or Yemen people, where Israel is, all these things are going to fight against. So my best bet, if you ask me of my view, I would say that the governor will be so conservative that he will possibly retain the policy rates, as he said, with a view with what he is saying in international and the global geopolitics. So I think governor will not rush. I know he's very, very careful, and he wants to make sure that if it's dropping in a better form that will help the private sector. But the geopolitics that is going on at the moment in the Middle East, it doesn't look like oil prices will go down further. And if it doesn't go down further, and don't forget, it also affects shipment of goods, because most of the goods are shipped through that area to Europe and possibly to Africa. Right. And if there are crises over there, definitely it's going to affect us. So for sure, where I sit at the moment, I think governor will be very, very cautious. If he possibly drop it, not more than 0.25%. I doubt it, because if you look at what is going on, I would plead with him to be very cautious, not to be swayed by inflation, because inflation, as we've seen, we have in Ghana, we have what we call the cost push inflation. It's not demand. The cost push inflation, that we get this coming from outside. Okay. We always import so much that it comes with rising costs, and that affects us. And if you use only the monetary policy to control it, you're not going to achieve your target. And I believe the governor, very, very shrewd, would possibly, with their geopolitics, would possibly maintain it where it is for maybe until the next policy meeting.
Dr. Richmond Etuaine, great to have your thoughts this afternoon. A pleasure to speak with you. I appreciate your time. Dr. Richmond Etuaine, the banking consultant. The Ghana cedi has lost over 2% in value to the dollar this year. However, analysts expect improved investor sentiment following the expected inflow of $600 million bailout package from the IMF and other budgetary support from the World Bank. There's more in this Business Desk report.
Last week, the cedi continued to cede ground to the major trading currencies due to a stronger US dollar despite some foreign exchange liquidity injection. This caused the American greenback to gain across a basket of African currencies, including the local currency. As a result, the central bank's $11.6 million spot market support failed to cushion the cedi as it ended the week's trade to a mid-rate of 12 cedis 53 pesos to a dollar on the retail market. The local currency also dipped against the pound and the euro on the retail market. The executive board of the IMF approved the first review of Ghana's loan program, allowing for an immediate release of $600 million. Also, the World Bank confirmed that the debt rework has unlocked the release of $300 million in budget support, which will be considered by the executive board this week. Despite the prevalence of corporate demand, analysts expect foreign exchange market sentiment to improve as the deal's inflow should help increase supply-side intervention and cushion the local unit in the near term.
Now, the Customs Division of the Ghana Revenue Authority is poised to strengthen its relationship with border communities to improve trade facilitation and also strengthen security. The border communities have been identified as partners in government's quest to increase trade among neighboring countries. Assistant Commissioner at Headquarters Sector Command, Eric Kwawu, disclosed this to Joy Business after a health walk to kickstart this year's International Customs Week celebration.
The celebration of International Customs Week is aimed at taking stock of various achievements by customs agencies across the globe and as well as reviewing some policy directives in the previous year. In Ghana, the Customs Division of the Ghana Revenue Authority organizes stakeholder events and outreach programs to educate society on the work of the customs officials and to improve upon their work. As part of this year's celebration, the division organized a health walk to boost the morale of the officers. Assistant Commissioner at Headquarters Sector Command, Eric Kwawu, disclosed that border communities have become an important part of their activities, hence the decision to foster a stronger relationship with such areas.
Building relationship and fostering our relationship with border communities. Previously, we saw the border communities as smugglers, but now they are our partners in trade and trade facilitation. So they also give us information to curb smuggling and also deal with certain security situations. So this year we have invited them to be part of our celebration.
This year's celebration is under the theme engaging traditional and new partners with a purpose. Eric Bonney has also been speaking about the role of customs in regulating the importation of goods into the country.
We examine the goods before they are admitted into the country. So if we don't ensure that unwholesome goods entered into the country, we are just endangering society. So the safety again is to ensure that we don't admit illicit substances. So illicit substances, we can call it drugs, we can call it weapons.
The health walk to mark International Customs Week was attended by selected officers across various sector commands of the division.
And you're watching The Marketplace. Next, we have the Joy Business Advisory Series. We are going to be treating an interesting topic this afternoon, investing wisely. Godwin Kojo Udum is investment banker with SAS Finance Group. He joins us in the studio to talk about this. Welcome to The Marketplace. What does it mean to invest wisely?
Okay, so if we say investing wisely, you will have to first understand what investing is. Mm-hmm. So investing is you putting money into an asset to acquire it or either to invest in it so that you get returns at the end of it, either to build wealth or to also protect yourself against uncertainties in the future. So if you say investing wisely, it's about money. So the wise way to keep your money safe, to make returns on it, and then to also grow wealth.
Yeah, and emphasis on wise because there's not so much money to go around these days. So when you have money, you need to put it somewhere that you are confident will bring you returns. And so what are some of the questions that people need to ask themselves before they make an investment, do you think?
Okay, so you need to find out your investment goal, okay? Because in every investing, just like football game, you need to see the post where you are going to, and then you need to strategize how to get to it. Okay, so you need to understand your investing goal, first of all. And then that will guide you how much money you are able to let go in planning towards achieving the goal that you want to get with investing.
Yes.
You would also have to understand what you are investing in, which is very important, because you can't put money into something that you don't know how you are going to get your returns from it, or how the business is even operated. So it's mostly good that you understand the business as well. And then along the line, there are different ways of investing. You could either be an active investor or you could be a passive investor, okay, depending on the time you have on your hands. If you want to be an active investor, it's all about you always being on your investments, like basically close to a broker, because you
always watching.
Always watching. Yeah, that's a good word. And then there's the passive for maybe someone who has a 9-to-5 but still wants to create wealth.
Okay.
That person can always see a broker who is their duty to spend time to be able to turn around the funds for you and all that.
I mean, you touched on a very important subject of understanding what the investment scheme is. I mean, where can you go to get an understanding of an investment scheme?
Okay, so in the investing space in Ghana, we have brokers like Strategic African Securities, where I work with. We are mandated to give investment advice, licensed by the GSE as well, and then the SEC. So we give investment advice on where to put your money and then how to make the best of returns. So anytime you want to start investing, you can either go online, read for yourself, but if you want face-to-face, you should always find a broker.
Yeah. So next question is investment for everyone. I'm asking this because some people feel, well, I don't earn much, so what's with putting my money somewhere? I'd rather save my money than invest, stuff like that.
Yeah. So it's always good to make money on your money. Yeah, they always say let your money work for you. So whether it's a CD, you never know where the CD will go to, although depreciation and all that. Yeah, but you never know where the CD will go to. Okay, you can keep a CD a day. You can build your base before you really start investing. You need to be good at saving, where you have some investable income that you want to put into the investment that you are doing. So with any funds that you have, whether you are a 9-to-5 worker, whether you are informal worker, so long as you make some CDs, it's good to always put some aside as an investment for your future, for your short-term, medium-term, long-term goals.
Yeah, so everyone can invest. It doesn't matter how much you earn. Next question is where to invest. We saw what happened last year. People invested money in places, and then in the height of the economic turmoil, they were feeling quite disappointed. So, I mean, tell us a bit more about some of the investment schemes around that people can take advantage of.
Okay, so when it comes to this, you will have to look at how much returns you are looking at making. Okay, if you have a lot of risk appetite, you assess your risks and you want to make maybe 100% in 3 months, 6 months, you need to go for higher risk securities. So we have higher risk securities like stocks, real estate, which can give you higher returns in a short possible time. We also have mutual funds for someone who would want a nice blend of equity and then fixed income in their portfolio. And then we also have the fixed income, like the treasury bills, which is being traded the most at the moment. So big banks, everyone is doing T-bills. So
would you say that's the best place to invest right now? Because
it's about returns. When I mentioned that your risks that you want to assess. So looking at the riskiness of treasury bills now, that's the returns that you are getting. So it's about the returns. If you think the risk over there is good enough for you compared to the returns you are getting, then yeah.
I mean, you keep talking about risks. I'm sure that's one of the reasons why people are not keen on investing, because of the risk associated with it. How scary is it?
Okay, so for we investment bankers, risk is equal to return. I can just say that.
Risk is equal to return.
It's equal to return. So the higher risk, the higher return. So of course, we are in a very challenging investing environment at the moment with investable, disposable income very low at the moment. We've seen the GSE market, trading 50% lower compared to last year. The fixed income markets doing the same as well. So what I can say there is that it will be good to have a nice blend, okay, to have a good way of investing going forward.
You should have a nice blend. So, I mean, there are risks, but it's not always risky, is it? I'm just saying this because, I mean, bottom line, we've seen it happen last year where people have invested their monies and they're expecting some returns and then they're not getting it. It's creating a whole issue and it's affecting confidence and trust in some of these investments.
For securities, something like a T-bill like this, you know, when you buy it, you know what you are getting at the end. Okay, so the risk is just hoping that the government doesn't default when it comes to something like a T-bill. So if you feel your risk appetite is in line with a government not defaulting, then you can go for T-bills. If you believe in a listed company like, let's say, MTN, Total, GCB, very strong companies, you know, you can go there to, you know, with understanding of the type of business they are doing, understanding of how profitable they are, and the returns you are expecting to get from them. And you'll be good.
Okay. I believe we are going to be talking about this tomorrow. In case you lose money, I mean, are you able to get your money back, the role of the regulator and all of that. But in 30 seconds before we move out, just for our audience who are watching, any investment tip for 2024?
Okay, so I will say that start early. At any age that you would want to invest, it will be good to start early. There's an adage that the best time to do something, if it wasn't 100 years ago, is today.
Okay.
So if it's your first time you are getting to know about investments, it will be good to start today. It will really help you build wealth for the future to also secure your financial independence as well.
Godwin Kojo-Odum, an investment banker with SAS Finance Group. Good to see you. We'll see you tomorrow as well. And this is The Marketplace. Thanks for watching, everyone. More news on our website.
Thank you.
myjoyonline.com/business. We've got all our top stories over there. Thanks for watching. We'll be back same time tomorrow.